Well, let's talk about a big old question that we always hear in the real estate investing world, which is how many properties should I try to get? How many properties do I need? Well, the first thing I'm going to talk about is if you get into the real estate investing world and community, people love to brag about how big their portfolio is. And there's a bunch of different ways that people measure it, and they're going to measure it in the way that makes it look the biggest, obviously. A lot of people will talk about how many properties they have. That's how many individual titled properties they own. But if those properties have multiple units in them, like a multifamily building, a house with a basement suite, garage suite, you better believe people are going to say how many doors they have. Oh, I've got 2 houses with basement suites. I got 4 doors. It's great. Or people will talk about their total portfolio value. I own $25 million worth of real estate. Cool, not bad at all. They could own one $25 million building. Maybe it's a big industrial bay. So they've got 1 door, 1 property, 25 million. Then it gets even more complex because people will start doing this thing called joint venturing, raising capital, building business partnership. Let's say that I want to buy a $5 million apartment building and I don't have enough money. So I find someone who has the money to invest. We partner up, we buy the building. Okay, well, let's say I have a 25% stake. Am I going to brag about owning 25% of a $5 million building? Or let's say that apartment building had 10 units. Am I going to say, well, I own 25% of 10 units? No. People are going to brag about owning the whole thing, even if they own a portion. So that's where it gets tricky. And that's where I would highly recommend as a real estate investor to not get too tied up in the comparison game. Because out of that whole story, the person that owns 1 door, 1 title, $125 million building all by themselves, that's the most impressive piece. That's more impressive than owning 50% of 25 million. That's more impressive than owning 20 doors that are only worth 5 million versus 1 door that's worth 25 million. So here is the measuring stick. Here is the best way to measure your portfolio size and the efficiency of how your capital is working for you. The measuring stick, the thing you got to pay the most attention to before anything else, is how much is your ownership stake of your portfolio? If it is a $50 million portfolio that only you own 10% of, well, that's only a $5 million portfolio. Now, here's where this becomes an important measuring stick. Because let's say that you own 10% of a $50 million portfolio. Okay, a $50 million portfolio probably has more doors, more complexity, more tenants, more revenue, more expenses, more overhead, more complexity, more of your time than a smaller, quote unquote, but simpler, owning 100% of $5 million worth of property. Maybe that's a few houses. Maybe that's 1 building. Okay, but it's 10 times smaller than that $50 million beast. That's why joint venturing can get a little bit tricky, because you own a portion of the asset, but as the real estate investor, as the person leading the deal, as the managing partner, you still have to do 100% of the work on behalf of everybody else. That's where it gets tricky as a real estate investor, you see, because as the investor expert, we are signing ourselves up to do the work, and in exchange for that work, we own a portion of the asset. So here is my contentious idea. Less is more. Partnering will help you scale, but if you partner your way to a massive portfolio that you only own a small piece of, I can tell you right now, you're going to do a ton of work for a relatively smaller amount of return, as opposed to owning a larger portion of a smaller portfolio. As long as you own the same amount of dollar value of that portfolio. Remember, 10% of 50 million, $5 million is the same as owning $5 million worth of real estate. You own 5 million bucks either way. Owning 100% of 5 million is typically going to be a little bit less work. So, as a new investor, we think the currency is money, doors, value of the total portfolio, size, how many doors do I own, how much of a behemoth are you, how many properties are you responsible for? And then as you become a older, wiser real estate investor, you realize that the most valuable resource is your time. It's your time, people. So a smaller portfolio means less tenants, less time. So this is my advice to you. Figure out how to own the most property where you own 100% of it, because even partners require your time to have conversations with them about what's going on in the property. I would submit to you that it's better to own a bigger portion of a smaller portfolio. Less partners, less tenants, less doors to maintain for the same amount of property that you own at the end of the day that contributes to your net worth. When all the dust settles, you have a $5 million net worth on that $5 million 100% owned portfolio as you do owning 10% of a $50 million portfolio. And that $5 million portfolio is probably going to be a little bit less time consuming for you. That's it. Forget all the measuring sticks. The one that matters is how much you own and how much time you have to put into owning it. Own the most amount of property with the least amount of time commitment. And that is the freedom that we are looking for as real estate investors.